Everyone and welcome to my channel Options Trader Today. So today in this video I'll explain you how the price of gold has moved in the last 2 days and how the price of gold can move in the next 2 days. See, if you look at the chart of gold, what we have seen, gold is moving in this particular zone. Okay, and you can say from April 24 it is continuously moving in this zone and has made three highs: first, second and third high. Fourth time it is on the higher side, you can say probability is very high, and the pattern is also forming that we can see there will be a chances it can make another new high. Okay, and previously what we have seen in 2013 and 24, 23 and 24, that it was moving in this zone. As soon as this breakout happens, we have seen it has touched this particular level and then sustained above this particular level, and then it is now trading in this zone. So you have to keep it in mind that whenever the gold is moving, okay, it moves in a zone and then an upside movement we have seen. Okay, if you look at the previous charts also, it is continuously on a higher side. Now it is trading in this zone, so probability can be high. If it keeps sustaining a level of around 2400, we can see there can be another new highs. Okay, and then the price can sustain for another period. If you look at the dollar index also, you can see that dollar index is trying to go higher. Okay, you have to keep it in mind that if the price keeps sustaining above a level of $104, we can see there can be a further upside movement for dollar index, then the gold price will come down. But if the price of dollar index started falling below a level of 104, a further fall we can see, which will in turn increase the price of gold. Now the price is moving in this zone, okay, with a high of around 104.5 and a low of around $103.6. So if it started falling below this particular level, that means if it started going above a level of $104.5, a further upside movement, and if it started falling below 103.6, then a further downfall. Okay, so you have to remember that both these things, okay, both these points, they are inversely related, dollar index and gold. So before I move ahead and explain you, if you have any doubts, you can mail me at stockmarkettradinglive@gmail.com, and one more mail ID in the description. And please watch the full video so you understand how this technical work, and a telegram link also given in the description. You can join that too. See, after forming a swing, there is a continuous upside. We have seen overall trend is high side if you look at from the month of June. Okay, and this particular pattern is supporting towards an upside that the gold can make new high. So if the price sustain this level, we can see it can move towards $24.51, which has today we have seen it has touched this level. So if the price sustain above a level of 2451, probability of going towards a level of 2462 will be there, and if that sustain, a further upside movement we can see towards $2469. Okay, keeping that in mind, there will be higher chances that we can see a level of $2475, and if that keep sustaining that level, we can see a level of $2483. Okay, and then a further high we can see, because see, there is a clear pattern forming and towards an upside, a probability of crossing a level of 2483 we can see. So probability of touching 2500 also we can see, and then it can go towards $2550. So what you can do best is keep trailing by 10 to 15% all. Okay, 10 to 15% or dollars, so that you can capture a big movement towards an upside. Okay, so that if you trail your SL, you can capture the big movement. Suppose if it is trying to go towards 2600, so you can take the maximum of the profit. But suppose if the price didn't sustain, so you have to keep that in mind also, because see, if you look at the 15 minutes chart, you will see that we have seen a lot of volatility in the gold prices. See, it has went upside, came down also, so there is a lot of good volatility we have seen. So you don't have to use your full leverage. Okay, and decide your risk as well as your target accordingly. Suppose if the price didn't sustain, we can see it can fall further down towards a level of around $2433. Okay, see, these are the resistance and support, so you have to decide your leverage also according to it. You should not be using your full leverage. Okay, because see, market is uncertain. When there is a big event is coming with a high volatility, decide your quantity as per that, because then you are working on a high leverages, then it will wipe out your capital. Suppose if the price didn't sustain, it can move further down towards a level of $24-29, and if that didn't sustain, a further fall we can see towards a level of $24.14. Keeping that in mind, that if the price falling below that level, we can see a level of 2403, and then a further downfall we can see towards a level of around $23.84. Okay, chances are very high that as soon as the price started going below a level of around $24.04, probability of moving further fall we can see, and chances of going towards a level of around 23.71 will be there, and then a further fall towards a level of 23.68. Okay, and then we can see it can fall below a level of 23.55 and then further low, and this is the zone, so further downfall we can see.